Welcome to Frankly Speaking. This is a new podcast on responsible business by Frank Bold, the European public interest law firm. And I'm Richard Howitt, and after several years of debating these issues inside the European Parliament, I'm hosting our discussions on the latest political, legal and business developments in the field of corporate sustainability, business and human rights. Today, Frankly Speaking welcomes a world leader in sustainable finance. Marilyn Waite is Managing Director of the Climate Finance Fund, addressing climate change through investment, covering the markets of China, Europe, and the United States. Marilyn also serves on a number of boards and investment committees, is editor-at-large for the sustainability media company GreenBiz, and earlier this year was appointed to represent civil society organisations to the board of the European Financial Reporting Advisory Group, EFRAG, the body bringing forward sustainability reporting standards in Europe. Multilingual in French, Spanish, Mandarin, and English, Marilyn describes herself as a global citizen. Marilyn, you're very, very welcome to Frankly Speaking. And I want to ask you, before we get into all of the issues around sustainable finance, how you first came to sustainability. What was it in your life that made you start thinking about sustainability?
Thank you, Richard. Thanks for having me. And thank you to Frank Bold for this new podcast. So sustainability as a concept is an interesting one in that a lot of people think it was created by a United Nations process. And in fact, it's been around since our ancient civilizations. So I'd like to think that from birth, I've been embedding this concept in life because truly it is everything, right? It is our environment, our planet, our species, our survival, our thriving, our economy, our well-being. And so I think growing up, I've always been very attached to protecting the environment and our ecology and seeing that as a part of our overall well-being. But truly, I think inside each human being, there's that sense that we are all one and we're all connected. And that is the essence of sustainability. So there we go, from birth.
What an apt answer that is. Thank you. Thank you indeed, Marilyn. Now, you've gone onto the EFRAG board, so you've got a close interest in the European standards, but you're following the policy regimes around the world, and you, including the new global sustainability standards of the International Sustainability Standards Board, the ISSB. And so when you look at them, there are huge amounts of data and reports and pages to go through and so many issues we could talk about. But at its heart, do you see alignment with the Paris goals? Are we going to be able to keep to 1.5 degrees if we follow what is being said in European standards and in the global standards? What do you say about that?
So right now, the draft ESRS, so the European Sustainability Reporting Standards in the draft form, they do include alignment plans, transition plans with 1.5 degrees. So that is very important. The current ISSB standards do not. They do not have a 1.5 degree threshold. We are yet to see the GSSB, so the Global Sustainability Standards Board, form with ISSB a global baseline because we'll need that combination to really cover all the topics. So we have that notion embedded, but let's go back to the Paris Agreement because I think we often forget the Paris Agreement was not just about degrees or tons of emissions. It was also about equity and a just transition. So to be Paris aligned also means you're aligned with this concept of JEDI being justice, equity, diversity, and inclusion. And so when we think about that, our question should be, well, do these reports and do these metrics allow for all stakeholders to understand a company's risk, opportunity, and impact on people and planet, align with the full definition of Paris, which includes that justice component?
So can I just pick you up on that risk versus impact? Because that's not just for every company, particularly in the investment sector. You get some who argue that this should all be about enterprise value creation on better understanding what climate and sustainability means to risk to the company. And then they say, well, impact is another thing, and you've got impact investors, and they're the ones that are worrying about the external impact or effect of the company on the environment. Where do you stand between those two?
So all investment has impact. Every loan, every share that you hold in a company, all of it has an impact. So the idea that there's somehow this other class of investors is bogus. A lot of the metrics that we would like to see disclosed and of course managed have a circularity to them. So you could imagine that a certain risk that exists in the world, let's say the climate crisis, the risk that I probably know best, the risk that the climate changing has on a company is also influenced by the impact the company has on creating that same risk. So this is really a false dichotomy. You really have to have all three components, the risk, the opportunities, and the impacts, to make wise investment decisions. So that's where I stand.
Okay, that's really clear. You were talking about the GSSB, which is another acronym that's cresting the Global Sustainability Standards Board, and that they work as part of the Global Reporting Initiative and have allied both with European standards, but now also with the global standards. And you would hope that they would push for this, what Europe calls double materiality principle, also to be adopted by the global standards then.
Yes, I don't think there is a true international sustainability reporting standard that doesn't comprehensively include what all investors need. So there are different types of investors that will have different theses, and that's fine. But we need to be comprehensive about the disclosure to meet all the investors' needs. And of course, other stakeholders, other market participants that rely on that disclosure for decision making, and also enterprise value. Indeed.
Now, when we get into sustainable finance, people start talking about billions and trillions, and we're clearly not going to beat climate change unless we think big and have that sort of scale of knowledge. But the amount of money that you're raising and all of those in sustainable finance at the moment is 600 billion plus a year, and yet the UN says that we need something like 3 trillion a year to succeed. Do you think we will reach those targets? And does public money really leverage private money? What's your own thoughts about that?
When you speak to venture capital funds, for example, within the European Union, they will say how much public finance is actually missing. And in many examples, we see that public finance, public budgets are waiting on the private finance to start, whereas it really should be the opposite. We really should see, especially for something as systemic and systematically important and pervasive as climate, we really should see that public finance taking the first step, taking on the risk, ensuring that there's the enabling conditions for private finance to come in. And we do not see that first.
You also work with policymakers in the US and China. Let's deal with those. We have a global audience, to frankly speaking. US first. So the Securities and Exchange Commission guidelines for climate reporting by business were very eye-catching earlier this year. We've also seen the Department of Labour bring forward new rules for retirement pensions to be able to meet climate-friendly goals. So we're seeing the beginnings of real change in the United States, but you also hear from friends and colleagues there how politically divided and partisan these debates are, and that they may well be slowed up, and that we won't see them be realised in the sorts of timescale we need. How do you feel developments will occur in the United States? And of course, will that be aligned or integrated in any way with what's going on in the rest of the world?
Right. So there is enormous action taking place in terms of what we call the alphabet soup of financial regulators in the United States. So we see it across the financial regulatory landscape. And all of that is moving forward. I would say everything. Unfortunately, it seems everything is politically divided in the United States. Wearing a mask is a political statement. Public health crises is political. So regardless of political divides, this is moving forward. And this really is about all hands on deck, everyone, urban, rural, doesn't matter which part of society and which fabric of society you're in, climate change is all encompassing. And so these various rules that are being put in place, they really are geared to protect retirement savers for their retirement savings, especially against any kind of stranded asset risk or other climate risk. They are there to help spur more investment and everything that comes with that investment, including employment in the climate solution space. Now, we can briefly move on to China, because I would say in China, things are also moving forward. So we have, the equivalent regulatory commissions. So the Chinese Securities Regulatory Commission, which has mandated all Chinese companies, all A-share listed companies, must disclose their carbon footprint. And if not, they face a fine. We also have the Chinese Insurance and Banking Regulatory Commission that are starting to implement climate rules. We have, by far the world's most advanced central bank when it comes to climate is PBOC, People's Bank of China, in that they have actually not only talked about climate change, but they've actually done something with the carbon reduction facility so that for the banks that want to lend for green lending, they can get 60% coverage at a much lower interest rate for those loans than if it were carbon intensive. So we're talking about a difference between, let's say, 4% as an interest rate versus 1.75%. So it's a huge premium for supporting climate-friendly lending in the Chinese banking system. And it's the only central bank to take such measures. So we can see things advancing across the globe and across, of course, the three markets that we focus on, China, Europe, and the United States.
On China in particular, clearly we're not going to do it on climate change unless China is part of and a big part of the solution. But you get many critics who will say that the data you get from China can't be relied upon, that you talked about Jedi earlier and justice and some of those principles that you were talking about, not easy to progress and even to monitor within China. And from an investment point of view, you're putting a lot of money into China. What gives you the confidence that there's the integrity there for you to be able to do what you need to do?
The data challenges are global. They're all over the place. It's not only in one location, not only in China. And I would say that's why we need to have these regulations so that there is a mechanism for enforcement, for holding companies accountable. And this is just starting, right? So the regulatory side is just starting. So we really have to give it a year or so when we have a complete set of data to really judge on that quality. I think regardless, though, it's important that the data quality is made transparent itself. So, for example, in PCAF is the Partnership for Carbon Accounting Financials. Over 260 institutions are now a part of it. It's over, just under 80 trillion US dollars of assets under management. So it's huge. Banks in China are adopting, as well as across the globe. Literally every continent is involved in PCAF. And with PCAF, it's not just the data that's provided. There's a scoring system to the data. So there's a 1 to 5 scoring system whereby if it's really third-party certified, audited data, it's given a number, versus if it's an estimate, it's a proxy, it's given another number. So that at least there's transparency around that. And I think that's what we need most, is to at least understand what it is we're looking at in terms of the data. And we don't have perfect data for literally anything. Like anything in life, we rarely have perfect data for, and we still manage to get on. We manage to fly airplanes, to drive vehicles, big engineering feats. I'm a civil engineer by training. I know what we do. We implement a safety factor when we build a bridge because there are things we don't know. So we have a precautionary principle embedded in that, without having perfect data.
I think you've just thrown off your disguise as a data geek, but it was a great answer. Can I just pick you up on PCAF, because that will be known to some of us, but perhaps not to all of our audience. The UN Framework Convention on Climate Change reports 8,000 different initiatives by business and investment on climate change. And there is confusion out there, just as there is about sustainability reporting standards, about what to follow. I think you see PCAP as being supremely important in this. And I just wonder, people in business in particular are a bit confused about the European standards and the global standards for reporting. Is PCAP yet another thing we all have to do? Just try and differentiate what its purpose is and where it fits into the jigsaw.
Well, when it comes down to it, people have to follow the rule of law wherever they are and wherever they're operating. On the voluntary side, the purpose of the voluntary mechanisms are to help shape what then becomes mandatory, to prove what is possible in terms of data collection and reporting. And PCAP has been recommended, for example, by the European Banking Authority as a part of its mandate for all European banks to measure and disclose their financed emissions. We hope that it's also taken up across the United States, China, and the rest of the world for all banks and asset managers in the way in which they measure and disclose these emissions, so that there's a unified, harmonized methodology behind it. So again, we know what we're seeing. And so that is the point of it all. PCAF, it is not another extraneous standard. It is building off of the entire greenhouse gas protocol system with scope 1, 2, and 3 emissions. And this would be scope 3, category 15, which is investments. So it is very much a part of a foundation of how we account for carbon. So all of these things tend to connect with each other. But for a financial institution, it's quite clear. You need to measure your GHG in terms of your loans and investments. You need to disclose that, and then you need to reduce it. And what you do to do that is you use PCAF, that methodology, to do the measurement and disclosure. And then when it comes to reducing, you have tools like Science-Based Targets Initiative that provide methodologies to then actually reduce, set a target, and actually become carbon neutral, let's say.
I've worked with many companies on their sustainability strategy and reporting, and what really helped me to understand about PCAF, this is about investors, this is about finance being able to analyse the climate impact of their funds and their portfolios and their investment. So I recommend people listening to have a look at that if you haven't come across it. But you've also looked at it from the point of view of the person or the organisation or the company receiving the funding. Tell us a bit about that.
Consumers or customers or retail investors, we are the foundation of the entire financial system, right? Without us, everything falls apart. And we have been systematically overlooked in sustainable finance and climate finance on all kinds of levels. Yet it's our savings that make up pension funds. It's our deposit that makes up the bulk of bank deposits so that they can leverage to make their loans. For each dollar or euro or RMB in a bank account, the bank is leveraging that by at least 10 times, right, to make their loans. So we have enormous voice, and we're just beginning to start to see us leveraging that to drive change, because where you bank does matter. And if that bank is climate friendly, does matter. And it's what I love about that is that it's a behavioral action that can be taken only once and it lasts you forever. The minute you open up a new bank account in that climate friendly bank, you're good. You can just, that's on autopilot, and that's already having a positive impact while you sleep.
That's a call to arms if I've ever heard one. And I wonder, you've explained a lot about what's happening now in the US, China and Europe, but I wonder if you add on 5 years, what are the next innovations in terms of market regulation, in terms of possible legislation that you would be advocating for, and that we might well be seeing as the next step after what we're doing today?
I think what's coming, a lot more fintech innovation. We're starting to see that innovation in climate fintech, in banking, in terms of neobanks, challenger banks. We're starting to see that in investment products. I think we're going to see more in insurance. It's already starting in the United States. I think we're going to start to see more in the private market. It's already starting as well in terms of accessing the outsized returns that tend to happen more in the private markets. And I think we are going to have much clearer roadmaps for that sector connection. So in the finance puzzle, we have the macro numbers in terms of what we need to solve climate change. We have to map that more effectively to the real economy sectors. And of course, it's all of the above. We have to do it all. All of the project drawdown solutions need capital. I think we're going to start to see more innovations and more solutions that are going to the overlooked parts of the climate challenge, especially in food and agriculture, and in what has been the tough nut to crack in buildings for whatever reason.
There was a lot on that agenda. So many of us, when we're talking about climate, you end up in doom and gloom. The challenge looks too big. We're failing it in so many ways. But then that almost disempowers you. It stops you doing the things that you need to do. You show immense leadership in this field. Are you able to still be optimistic? Do you think we will still beat this challenge?
That's a great question. I'll go back to, the saying that hope is more about having the conviction that things make sense, regardless of how they'll turn out. And so I think that has to be what keeps us on fire in this fight and in this battle and in this, I think, what is a peacetime effort of solving climate change.
Marilyn Waite, you've made a lot of sense in Frankly Speaking today. Thank you so much for being with us. We have indeed come to the end of our podcast. We'd like to invite all our audience to send us your feedback to franklyspeaking@frankbold.org and to share our conversation. You've been listening to Frankly Speaking, the Frank Bold podcast on responsible business. Watch out for our next episode and find out more about Frank Bold's Responsible Companies section on Twitter and LinkedIn. See you next time, and thanks again to Marilyn and to all of you for joining us. Goodbye.